The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we look at Tuesday's trade coming back out of the three-day holiday weekend, really the storylines sat in the soy complex with gap higher in beans, bean meal, bean oil seeing some strength as well. We had a really strong day in the hog market too. We had a lot of pressure in the outside markets, mainly the Dow Jones. So plenty to take a look at here on the show today. Pleased to have with us our good friend Jim McCormick with agmarket.net joining the show today. Jim, always good to catch up with you, sir. Hope you're doing well.
I'm doing well, Jesse. Nice and sunny here in Chicago, but we do have an ice storm on the way tomorrow. So, Mother Nature still can't decide if spring's on the way or not.
Yeah, you have the ice storm, and folks to the north and northwest of you are going to have around 2 feet of snow, it sounds like. So I'm with you. It doesn't, spring can't decide if it wants to get here soon or later. It's something we'll definitely be watching in the weather storylines moving forward. Speaking of weather, though, South America, Argentina, we saw some localized frost over the weekend. That seemed to be the main storyline driver in that soy complex on Tuesday coming out of the three-day holiday weekend, Jim.
That is definitely the story. It's kind of unusual for them to get a frost this time of year. It's probably equivalent to a late August, maybe early September frost here in the United States, to put it in kind of perspective. So there is some damage. I don't think it's a lot of damage. It's probably more cosmetic, but it definitely has the trade's attention. I mean, one thing with Twitter, good, bad, right, wrong, when you see bad crops, it gets all over the Twitter sphere, and a lot of people are seeing it. So that's definitely got a little bit of concern in the market. The other thing is there's just not a lot of rain in the forecast for Argentina. The maps keep trying to pull rain into it, but the reality is it just doesn't fall. So the crop is getting smaller by the day by all accounts. And then lastly, where is not getting rain is Argentina, but who's getting too much rain is Brazil. They're now continuing to fight to get this crop out. They're somewhere between 20 and 25% harvested. So they are making some progress, but it's behind pace. So those three parts of the stool are what's kind of driving this bean market right back up. And, it's pretty amazing. You would have asked me a few weeks ago, I did not think you'd have a shot at seeing producers have a shot at selling $14 new crop beans. But here we are right on the cusp of that as we speak.
Definitely right on the cusp of it. We continue to watch what's going on in South America, both Brazil and Argentina, as you mentioned. I know export shipments came out on Tuesday. Looking at the soybean side, we still seemed like we had a little more erosion of, the tight stock situation here on soybeans too. So I'd have to think that maybe played in a little bit as well into Tuesday's trade, Jim.
Well, that's it. I mean, the reality is, if you look at pricing of beans, Jesse, Brazil to us for spring delivery, Brazil's has all the pricing advantage we've got. But the reality is they're having a very hard time logistically getting grain to market due to the weather and everything else. So we are continuing to get some sales that I think the market just was not anticipating, because traditionally by this time of year, as we get into late February, the sales to China essentially has been shut off. So we're getting a few bonus sales, and with the ending stocks as tight as they are, that'll continue to tighten a little bit. Now, on the other hand, I was going to say the corn inspections were actually horrendously, they were within expectations around 25 million, but we need to ship out about 50 million to hit the USDA's target. So the corn sales still are not where we need them to be. Otherwise, the government may have to do some more cutting of the corn export number down the line.
Yeah, and yet the corn market didn't do a whole heck of a lot on the day Tuesday, just kind of drifted a little bit higher, really just, this corn market has been interesting. It seems like no matter what news item is thrown at it, it just doesn't want to do anything, Jim.
It's stuck in a range. I mean, right now, I think you've kind of got a battle of, hey, the stocks could be tight if China comes in and buys, but China has not bought. So that is limiting the buying. But you also see the bean market catching a push. When the beans had a strong day, it does kind of get a little bit of a tailwind to the corn market there. And, it is something we need to keep an eye on. I mean, a couple of years ago, the corn market exploded because Brazil got that corn crop, that safrinha crop, That makes up roughly 75% of their production. Planted late, the crop ran out of water, the market exploded higher. So we need to keep an eye on that situation in Brazil. They are behind pace, but the reality is they can make up that pace pretty quick and still have a very good crop. But the market just, we're kind of just in more of a sideways range, trying to decide, will that demand come or will it not come? And then also, we're going to get that acreage battle heating up relatively quick as we get the outlook numbers from the government, the outlook farm numbers from the government this week. And then, we'll see what the market starts arguing into the acreage report at the end of March.
I should ask too on soy meal, how is that playing into this whole equation here? Again, we're bumping up around that $500 a ton mark. That's been an area of resistance that we tried to put in what looked like a weekly bearish key reversal in this meal market twice now. And it feels like we're maybe, we tried to do that. Now it's going away once again with Tuesday's action. What's your thoughts with the meal picture, how that's playing into soybeans?
Well, overall, the meal has definitely been the driver right now due to the fact that, Argentina is a very big player in the world meal market. They don't have the beans. They can't ship out the meal. And that's what's drove us to the $500 level. I got to believe, Jesse, though, we're getting a little bit overbought, technically speaking. I think it's hard to get too bullish for me of meal over $500. I mean, the reality is that Brazil has this crop as big as it is. They will ship some beans over to the Argentina market, and the Argentina crushers will take advantage of those beans and turn them into meals. So I think you got to be a little bit cautious. But right now, as long as that drought story's intact and as long as the story of the Argentina crop getting smaller, it does seem to give a bid to the market. Now, I think in the long run, what you're going to see is the meal market's going to come under pressure. When I mean long run, multiple months and years out, and the bean oil is going to be the one that kind of leads the crush market as this renewable diesel demand just takes hold over the next couple of years. And the reality is we build out these plants to produce renewable diesel. We're probably actually going to have an excess supply of meal down the line, and we're going to be looking for markets to take that meal eventually.
You mentioned the new crop price earlier of soybeans. I want to touch on new crop quarter beans here. I think with old crop, folks have a pretty good handle, hopefully, on where they're at when that's the case here, whether they got something left in the bin or not. As far as a little bit of new crop marketing, though, I'm with you. $14 beans, $6 new crop corn, pretty strong levels going into spring planting season. It makes sense to me to try and get something started if you haven't started anything already, Jim.
I 100% agree with you, Jesse. I mean, the reality is, folks, you're looking at some phenomenally high prices for all intents and purposes for this time of year. And I know the break-evens are not, you're looking at the profitability. It's not as good as it was a year ago. And I know mentally it's hard to sell $6 corn when you're getting $7 in the cash market. But the market, this is how markets top, though. I mean, when you look back in 2012, this is, we had the same type of situation. When you top, the new crop never goes to where the old crop was. And I think we are in that topping process without a weather market. If Brazil has this monster crop, a lot of people are talking 91 million acres of corn, maybe as high as 92. We end up with a big Brazilian crop. We plant 92 million acres of corn in the United States and have anywhere trend or above crops. The reality is our carryout's probably going to push closer to 2 billion. And I think every producer out there realizes deep down, if we've got a 2 billion carryout, corn is probably going to be a lot closer to 5 than it is 6 when it's all said and done. And the reality is this is still a relatively expensive crop to plant. Now, I do know fertilizer prices have come down quite a bit from where they were late fall. But remember, Jesse, a lot of people did buy fertilizer in the fall to get it on, and it was quite expensive. So, I mean, there's a very expensive crop going in the ground. I think if you're a producer, both, no matter what you're producing, corn, beans, wheat, you need to make sure these margins are locked in because the economy still is a little bit sketchy. We still don't know, where interest rates are going to go. And, you don't want to look back and go, I wish I could have sold this grain profitable down the line when you turn down these high prices, plain and simple.
Speaking of the wheat market, I know KC wheat started to break dormancy there. Dry forecast, poor crop conditions. Seems like that was some of what gave us support in KC winter wheat on the day Tuesday. Chicago was under a little bit of pressure, and then spring wheat was kind of in the middle is what it felt like to me. Is that how you'd sum up the wheat market on Tuesday, Jim?
I would say so, but the one thing I'd say is dominant spreading is the spread trade. They're buying KC wheat and they're selling Chicago with both hands, and to be quite honest. I mean, the reality is we're not really competitively priced in the world wheat market. So, that's the big market. That's the one the funds like to play in. So they're selling at Chicago and the KC. I think you are finding a little bit of bid simply because this crop coming out of dormancy, it looks like it's going to be an early spring. Some very mild temperatures are coming and going. And a lot of our producers in that part of the world, Jesse, are saying, there's just a very poor stand right now. And, I think there's damage done. And, as we come in out of dormancy, we're going to know the damage, and maybe that's bringing a little bit of buying into the KC wheat as well.
And I know the dollar, at last I looked, was a little bit higher on the day on Tuesday. It doesn't feel like the dollar had much impact in the grain trade overall on the day Tuesday.
It didn't have a big impact today, but I think something we need to keep an eye on. The Fed's more likely going to raise interest rates. The reality is the economy is a lot stronger than a lot of people think. Some of these earnings are better than people are thinking. So now you're hearing people talk maybe a half point rate hike instead of a quarter. And the reality is, I think if you're looking for that quote unquote pause, it ain't going to happen. If it does happen, that meant the economy really turned for the negative. So the reality is the market's starting to price that in. So the equities were all under all sorts of pressure coming out of the 3-day weekend. But that higher interest rate will probably drive more money into the US dollar. And in the big picture, that is not good for American agriculture, because the higher the dollar gets, the more expensive our products are on the international market, plain and simple.
We are having a conversation today with Jim McCormick of agmarket.net, taking a look at the market trade here coming out of the long holiday weekend. Jim, I noticed as well in the equity markets, what are your take here? A really big down move in the Dow Jones on Tuesday. Last I looked at it. So it seemed like some pressure there. Maybe that gave us a little bit of money flow into commodities possibly on the day, Jim.
I think a little bit of money flow. I think the stock market, you got to look at it, Jesse. It looks a little bit negative. You take out, look at kind of forming a little bit of a double bottom on the chart on both the Dow and the S&P. You took that out. And I think the market is, I think we're probably going to see a little bit of a correction. The reality is, I don't think it's going to be a meltdown. I think we're in a sideways market. But I think there was just a little bit too much optimism that the Fed was close to, letting off that break, or, putting the brake on raising interest rates. I think, like I said, these earnings are coming a little bit better than anticipated. The jobs number, they're all suggesting the Fed, unfortunately, has got more heavy lifting to do on the interest rates. And it seems like the market just kind of came to that conclusion that maybe they're a little bit too far up on their skis and seeing a little bit of a correction. And, like I said, I don't think it's going to be a meltdown, but I think we're going to cycle a little bit lower near term.
Energies as well. Crude's been kind of stuck in this range right around $80, a little bit lower than that. And I know you watch China quite a bit, wondering what our outlook's going to be there with crude demand. A lot of folks think it's going to ramp up throughout the year ahead. What's your thoughts with crude oil right now, though, and just the range it has kind of developed, this kind of channel it's put itself in right now?
I think a channel is a good way to put it. I think a lot of people are optimistic in the long run that the crude oil will work higher. Or I don't know if you're optimistic. If you're an end user, you're not really happy about it. But, are a little bit friendly to the crude oil. And that all has to do with China. If China's economy does come out of this COVID lockdown and really get up and running, they're going to start consuming more energy. As they compete for that energy, it will drive the price of energy higher. But on the other hand, if China's demand isn't there for some reason, they continue to struggle. We know they've had some housing issues during the COVID situation, as well as this war in Ukraine continues to, cause problems. Maybe this market just trades more of a sideways mode at this point in time. It seems like it just can't get, like I said, it's kind of like the corn market. You're hearing a lot of stories that might just happen, but we're just not seeing that demand just yet. And there's just enough worry that our economy could slide closer to recession to keep, the buyers on a little bit on the defensive.
Jim, let's talk livestock trade, hog market. What a day there on Tuesday. Kind of the old adage of that pork and bean trade seemed to be evident as we saw a pretty big move to the upside in hogs. I know on Friday, cutouts were sharply higher. Bellies had a huge move. I feel like that might have played a little bit into the strength in this hog market on the day Tuesday.
You stole my thunder. That's exactly what drove it up. I think, 3-day weekend, a lot of people came out. Those numbers are showing the demands there, a little bit of optimism, exports, and away we go. This market has been looking for a bottom forever, and it feels like we're finally getting it. And that, combined with a strong cutout, combined with, people blowing the shorts out of the market, I think you're getting a nice little run today. So it's kind of nice to see.
But I know on the flip side of that, to play the devil's advocate here, we've seen some of these moves and then, we go another day or two ahead and we usually give it all back. So I wonder, technically speaking, you look at a hog chart fundamentally, I know you mentioned trying to find a bottom, but does this feel like finally this could be something that's sustained, or should we proceed with caution here?
I think you need to proceed with caution here. because the reality is, the chart, everyone's been looking for the bottom. The charts are looking a little bit good, but the reality is the supply is still relatively abundant. We may be seeing a little bit of a reaction to the storm that's coming through. Like I said, where I'm at here in Chicago, we're going to deal with ice, but you get north of I-80 into I-90 territory, they're talking 1-2 feet of snow. So, logistics of that northern, moving livestock or moving anything in the northern part of this country is going to be slowed down for a couple of days. So that might have added a little bit today's might have been part of the reason for some of today's strength.
How about this cattle market? Saw a more relaxed day there on Tuesday, but we continue to watch what happens in cash country. It seems like those bids every week end up going up another dollar or two. This cattle market has been interesting to watch. What's your thoughts there coming out of the holiday weekend?
Overall, I think it looks good. I mean, the reality is, like I said, the cash market continues to firm. I think that's probably the best sign I can give you right now. I mean, the one thing I just got to be very cautious to people about is everyone's friendly cattle on the supply side. We know the numbers are going to tighten. We know when we get the cattle on feed report here in February, those numbers are going to be friendly. More than likely, that's been the trend. But the real question is going to be, how much will the consumer be willing to pay or is able to pay at this point in time? Are we going to get to the point where you essentially price a consumer out? And that gets a little bit tricky to know where we stand right now, because everyone keeps thinking, wow, maybe this is the time we're going to hit the, credit card debt is at, at all-time highs. Maybe that's got to be the limit. But then you look at the credit card debt to, income ratios, they're not as bad as what it was in the early 2000s. So, I mean, every time you can look at all sorts of economic stats that say maybe we are going to see consumers finally reining it in, but then the consumers come in and go at it. I saw a headline today saying, we are back to spring break. Hotels, airlines, they are completely full. The Americans are on the go, and that's a good sign. Traditionally, when Americans are out on vacation, they tend to go out to eat. They tend to go to steakhouses, and if the demand's there, combined with the tight supply, that is a recipe for bullishness, plain and simple.
That is a great point you make, and I think it'll be fun to watch this market here the next couple of months ahead as we go through some of those highlights, get into that summer grilling season as well. Jim, always appreciate the time and insight. Before we wrap it up today, any final thoughts you have for us? Anything else you want to reiterate today?
One thing I'm going to reiterate, probably on the grain side, even the livestock side, I think there is a lot of risk out there, is what I kind of point out to the to the public listening. I mean, there's a lot of bullish stories out there, but the reality is we are probably some of the most uncertain times we've had in a very long time. The economy goes the wrong way too quick. Like I said, this is a very expensive crop we're planting right now. Do not be afraid to lay off that risk and come up with a marketing plan. Don't get caught up on the price, get caught up on the profitability. That is the key, we believe. If you can make profitability in 2023, that guarantees you're going to be farming in 2024. That is the plain and simple fact. If you're not profitable in 2023, 24 could be a very tough year, especially if we happen to have very good crops going into a cycle of big South America crop, followed by a U.S. cycle of big crops. That is a recipe of lower prices. So now's the time to defend these prices. There's not too many times you have an opportunity to lock in $6 corn and $14 beans, before Easter, plain and simple.
Well, Jim, if folks need a little help, little advice looking at the profit side versus just the price and talking with you guys there at agmarket.net, what's the best way to get in touch with you guys?
You can reach us at 844-424-6758 or go to agmarket.net and sign up for a free trial of our research.
Fantastic. Jim McCormick, agmarket.net. Always a pleasure, sir. Definitely be well. Stay out of that ice as much as possible here this week, and we'll talk to you again soon. Thanks so much.
Thanks, Jesse. Have a good week.
That's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great rest of your day.